So the VD five-step investment system basically looks at the key things you need to be watching out for when you want to get into an investment, especially when it comes to stocks. The first thing you want to watch out for, still going to explain these things a little bit in detail, is the environment. All right. You want to watch out the environment. You want to watch out for the market itself. You are going to be looking at the asset fundamentals or the business in question, and then discount and entry triggers. I'm just going to rush through them because we're still going to be talking about them as we progress. Right. I'm not going to waste my time with this. So when we are talking about now these things, each of them is as you see, this is the introductory module. Each of them, as they are like this, are full modules in the SME course. They are full modules in the SME course, but I'll just try to touch as much as I can on each one of them. Now, when we're talking about environmental analysis, you basically want to look at the country in question where you want to park your money. So you want to look at the political, social, and economic conditions of that particular country. Why is this important? At the end of the day, politics has a way of impacting economy. Politics always have a way of impacting economy. If you've lived long enough, you would have obviously understood this or come to the same conclusion. So whatever thing the government is doing will always have a way of affecting the economy of a country. I believe Nigerians on this call will have no qualms with that statement because we're currently feeling the heat of it as a result of years of poor government decisions or what have you. So you want to look at how stable is the country politically. What is the political leadership like? What is the respect for the rule of law? You want to look at the history of continuity of government policies. You want to look at all those things. What is the social conditions like? Is it a situation where you want to do business and then a group of people are just going to come and extort money from you in the name of a moneyless or what have you, and all those kind of things? What are the economic conditions like? So even if a business is good, but it is located in a bad environment, it's going to impact that particular business. Then another thing you consider in environmental analysis is the reliability of data. Can you rely on the data that is coming out from there? For instance, one of the reasons why I tell people that I'm not going to invest, I don't bother investing in Nigeria or Nigerian companies, is the fact that you can't really trust the data that is coming out. Sorry for those who talk about the market in the country. I usually say something. You choose to either be a business person or choose to be patriotic, right? Sometimes they can coincide, but usually not necessarily, especially as an investor. When it comes to the data that is released from the government, most times there is a sharp discrepancy between what you see on ground and the data that is released. So it's not trustworthy. When it comes to regulation, our regulatory frameworks are very, very weak. So companies will usually get away with so much rubbish that you can't really rely on it. Now, the history of performance. What is the history of performance? You also want to look at the history of performance of that particular country and that particular economy. So you want to check how they've been performing the last couple of years. So for instance, I tell people, as far as we continue on the trajectory we are, as I'm talking about Nigeria now, the currency will continue to fall against the US, against the dollars, right? And it will continue to fall very, very, very sharply. So history of performance, do I want to park my money there? No, absolutely no. So where there is a history of bad performance, don't suddenly expect that it's going to change. Instead, you should expect that it will continue. All things being equal, it will continue, right? So you want to look at the history of performance. Then you want to look at growth and stability prospects. What are the growth prospects? Are they doing things that ensure that the market will continue to grow? Are they doing things that will ensure that the economy will continue to grow? Are they doing things that will ensure that the standard of living is kept high? Because at the end of the day, it is people who are going to buy those products of those companies that you are buying into. If those companies are not able to sell their products and services, then they are unable to make money. If they're unable to make money, their earnings fall, their earning falls, their share prices fall. So you lose on share growth, you lose on dividends, everywhere you lose because you're a part owner of the business as an investor. So you want to look at growth and stability prospects. Now, quickly moving on, the next thing you want to consider is market analysis. Don't worry, we are going to do the practical of this. The first part of this webinar is going to be a bit theoretical because I'm going to run through all this so that you understand the background to what we are going to be doing in the second part. Now, this is a free Zoom. For those of you who are in the FX, because I've said I'm not renewing any subscription for Zoom. So if it expires by 7:39, please just click on the link and rejoin again, right? It's immediately just click on the link and rejoin. So in the second part, we're going to be doing a whole lot of practical using, in fact, one of the things I want you to do immediately you join in the second part is to suggest stocks. Just put up some stocks that you feel you want us to look at. So I'm not going to bring anything predefined. Like I'm not going to, apart from maybe while I'm waiting for options to arrive from you guys, I'm not going to bring anything predefined. I will just look at whatever thing you guys put and then we'll analyze it together and see whether it's a good stock or not, and at what prices it will be ripe for someone to consider beginning to buy into it. All right, now, next thing you want to do after doing environmental analysis is you want to do what I call a market analysis. So we are going through the VD steps, the VD 5-step system now. So the first one is the E, is called EMADE. That's the acronym for the 5-step system. EMADE: environment, markets, assets, discounts, and entry trigger. So EMADE. So if you can remember that EMADE, that is what you're looking at. So we've looked at environmental analysis, we are looking at market analysis, and then next we'll go to the asset fundamentals. All right, so in market analysis, what are you looking at? You want to understand the market, the stock market where you're coming into. All right, so whether it is the US stock market, which is my favorite, or the European stock market, the British stock market, the London Stock Exchange, or it's even feel that Nigeria is somewhere you feel like investing in the Nigerian Stock Exchange or stock market, you want to understand the various sectors. You want to understand how it is made up. You want to understand the various categorizations. Why is this important? So that you can know the growth trends. You're able to understand the growth trends. You're able to do a proper analysis of the history of performance. All right. So you want to check what sectors, because when you move to different economies, there are certain sectors that do better than others. What is doing better in country A might not necessarily be doing as well in country B. So, for instance, in the Nigerian stock market, for instance, some of the best companies or the companies that are relatively doing better than others are the banks. They're not doing so well, in my own opinion, but compared to other companies, they are among those that are performing so well in the last 10 years or thereabouts. They have been the ones doing so well. Now, if you go to a country like US, the technology companies are the ones actually pulling the weight. So you need to be able to understand this. You need to be able to understand the markets. You need to be able to understand the sectors. And when you're analyzing the sectors, what you want to be looking out for is the history of performance, one. The second thing you want to be looking out for are the growth trends. So when we are talking about growth trends, where exactly is growth happening? Where is growth happening? Now, as much as the banks have been doing well, the banks are not really growing that much. The banks are not really growing that much. So that is talking about Nigeria. Now, if you go to the US stock market, the tech companies are growing in leaps and bounds. It's crazy how they are growing. And that is because so much is happening in the technology space. So much is happening. Every new day, something new is coming out. Every new time, something new is coming out. So the growth is really crazy. So you need to understand, where are the growth trends? What are the growth trends in the particular markets that you're interested in? Then the next thing you want to ask yourself, what are the opportunities and what are the threats? So for instance, for me that likes the US stock markets, one of the biggest threats that I see there is the fact that the US government has so much debt. They have so much debt that they have, and that could lead to issues at some point when they decide that they don't want to keep that debt, and so they reduce their spending. But the issue is, are the US companies large enough to withstand such shocks? Yes, but you need to be aware of such threats. Now, in Nigeria, one of the biggest threats is the incursion of politics, is governance. One of the biggest threats, because a particular government could enter, reel out a policy, and disrupt an entire sector, and nothing will happen. And nothing will literally happen. It will stand, like you will just be amazed. So you need to be aware of those opportunities. You need to be aware of the threats that are facing a particular market and a particular sector in that market. Then the next thing is the business fundamentals, the assets fundamentals analysis. Now, for those who are going to be in the SME course, this is, you see, I spend a whole lot of time here, because if you don't get this part, you just waste time. You really waste time. Fortunately, because of our time, I'll only pick a few things from here, and then I'll have to run. Now, when you want to get a business, now you've decided, okay, the market is good enough, the environment is good enough, the market is good enough, maybe even the sector is good enough. The next thing you want to ask yourself is, the particular company shares I want to buy, is that company good? That is basically what you're trying to get in this particular model. That's what you're trying to understand when you're doing your assets analysis or business fundamentals analysis. The first thing you want to look for is, you want to look at the market share and competitive advantage. Is this a company that is dominant in its field? So you don't want to get into a business that has so much competition. Nope. You want a situation where they are virtual monopolies. They are so powerful in those their sectors that almost nobody can disrupt them. So, for instance, you have something like Microsoft. Microsoft is so dominant that almost no business is able to disrupt Microsoft. Even after Microsoft was asked to break up its business over some issues by the Department of Justice a couple of years back, Microsoft has remained so dominant. Same thing with Apple. Same thing with companies like Pepsi, even though Pepsi has one competitor in Coca-Cola, but little or no competition, right? Almost very few companies will be able to match up to them. Those are the kind of companies you are looking for. Why? Those are the companies that can raise their prices. You want to invest. See, when you are investing, you are not a consumer. When you're investing, you think like the owner of the business. You want to be able to raise your prices, and your consumers have no option but to pay. That is really what we are talking about when we are talking about competitive advantage or having a moat. So we discuss this more, the things that, and yeah, I'm just mentioning this so that these are things you can go and do more research on. What makes up a moat? So you want a situation where they are able, I've mentioned one now, that they are able to increase their prices with little or no consequence to their sales figures, right? They're able to increase their prices. So you see, go and check the prices of Coke, whether you like it or you don't like it, or Pepsi, they increase their prices. If you want to drink it, you buy. Let's say Microsoft, for instance. If you want to use a Microsoft product or an Apple product, Apple keeps raising their prices every single year. They are raising their prices, and people are still buying Apple. Those are the companies you are interested in. Right. So the next thing I want to look at is income. Now, when you are looking at income, you are looking at revenue streams. So you are going to do real life practicals on this, because these are the ones that are so easy to analyze. This one, for those of you who are in the SME course, we are going to look at how you use AI, how you can actually use AI to make your job a whole lot easier when it comes to analyzing the competitive advantage of firms. Now, when it comes to income, it's as simple as just going to TradingView. We'll do a real life practical of this. You just get to TradingView, and then you are going to look at the revenue. So what are you looking for? You want a history of increasing revenue. You want a history that is you want to look at the last 5 to 7 years, and you want to see that their revenue has been increasing consistently. That shows you that they're able to increase their sales, increase their prices consistently. They're able to make more money year on year on year on year. You want to see that happening. So as they're increasing that, you also want their gross profits to be going up. You want a situation where they're able to turn that revenue growth into profits. So their gross profits is going up, and then their net income, their operating income is also going up. And I've mentioned three things now. I've mentioned revenue, sales, I've mentioned gross profit, I've mentioned their operating income, and their net income. You want these four things to be going up. These are what shows you that they are making more money year in, year out. As a business owner, that is what you want to see. You want to see a situation where they are making more money year in, year out. Then you want a situation where they have little or no debt. Little or no debt. The debt has to be really small, right? Then when it comes to cash flow, you want to see the free cash flow increasing consistently. You want to see the cash flow increasing. Now, valuation, I won't talk about valuation because we'll discuss it in the next thing. How do you value a particular company? And then the last one there is management, profitability. How are they able to take the equity or take shareholders' capital and turn it into profits? Are they being good on it? And we have some metrics that we actually look at. Because of our time, we won't be looking at that one, but we'll look at income, we'll look at cash flow as we do our analysis, our practical session later tonight. And the next thing you want to look at is intrinsic value. This is one of the hidden gems of the SME course. We're going to, how do you know what a company is truly worth? What should the share price be? Why? You always want to buy a great company less than what it is. So volatility, for instance, this week, the whole market is red, but still nowhere, still far away from anywhere I'll be interested in to start buying anything. So you want to know what is this company worth, because you want to buy it when it is selling at discount. Things will usually happen when people go crazy, and you will see a company that is worth 300 and it will be selling for 150. It does happen, including in the US market. It happens every 5 to 10 years. It will always happen. Like clockwork, it will always happen. Where there will be a, as Warren Buffett talked about it, he said, it's that volatility creates a temporary mispricing of companies. That is when you want to jump in. But to be able to do this, you need to know what the company is really worth, right? You need to know what the company is really worth. But even if you're not able to do this and you follow the technical things I'm going to show you this night, you will still be buying these companies at a great discount. All right, now building your watch list. So with everything I've talked about this night, the first thing you want to do is to settle down and build a watch list of companies you want to be observing, companies they are interested in. So you don't start building your watch list when the market has not fallen. No, you build your watch list way in advance and then be waiting. You are just waiting like that hidden leopard, waiting to pounce on any goat that wanders into your path or that you've been tracking for a while. So what are the things you want to watch in your watch list? You want to look at what are the secular trends and industry prospects. What do I mean by secular trends? Secular trends are what is going on. At the moment, we are in the AI craze. The AI is just coming in to begin to revolutionize so many things. Who and who are going to be profiting from that AI, from the emergence of AI? Who and who? Those are questions you need to answer. What is AI going to disrupt? Those are the secular trends. For a while, it was technology, information technology and communication technology were the things that were disrupting the whole world. So those were the secular trends. But gradually, it's beginning to shift from there. Those things are still in vogue, but it's beginning to shift from there towards AI. Now, as technology continues to hold sway, what companies, what sectors should you be focusing on? Those are questions you need to answer. For instance, at the moment, if you are looking at AI, semiconductors, that's why NVIDIA has been going crazy along with all other semiconductor companies, because all these technology devices are going to be driven by what? Semiconductors. They're going to be driven by processors. That is why Amazon is flying, and every other company that produces, that gives out cloud services, because these AIs needs to be hosted somewhere. More websites are being created. All these things are going to be hosted somewhere. So Amazon, Microsoft, Google Cloud, every company that has cloud services are still flying high. These are the things that are propelling them. So you need to understand what are the secular trends. For instance, the population of the world the population of old elderly people in the world is increasing. So healthcare is going to be a key issue. The population is increasing, the population of elderly people are increasing. So healthcare is going to become a key issue, or is becoming a key issue. So that is something to keep an eye on. So you want to pay attention to this secular trend. So what are the secular trends you want to watch? Then, of course, I've talked about moats and market dominance. You want to make sure that those companies have dominance in the markets and they have a sustainable moat that keep their opposition or competitors from coming to disturb them. Then you look at income, all the things I've talked about before: income, debt, cash flow, profitability, valuations, and then the growth prospects. Now, the last thing, or for what we are going to be doing tonight, still have a couple of slides to cover. Let me see. Okay. Yeah, said I was going to stop at diversification. So even though you have great companies, I'll come back to technical analysis in the second part of this. Even though you have great companies, you want a situation where you don't keep all your eggs in one basket. You want your eggs to be in several baskets. So that is one of the things to keep an eye on. So you don't want to have all technology companies. You want to have a mix of it. Now, when we come back in the second part, I'll look at we'll talk about risk profiles, and then we'll go into technical analysis, where we'll then get on to the charts. So if you've believed this has been good so far, I want you to just drop a comment to the group and then join later once this closes. Right.